Today, I'll be taking you through why McDonald's might be a potential investment opportunity. As one of the leading global fast food chains, McDonald's is renowned for its well-known brand, burgers, and strong market presence. We will go through a quantitative and qualitative analysis of the company to gain a better understanding of a potential investment in this stock. McDonald's is a global fast food chain known for its hamburgers, fries, and breakfast items, serving customers in over 100 countries with a focus on quick, affordable meals. First, let's crunch some numbers through a quantitative analysis. As we look at the balance sheet, in December 2024, McDonald's had a current ratio of 1.2, which means the company has 1.2 times more current assets, like cash, inventory, and receivables, than its current liabilities, debts, and obligations due within a year. This suggests McDonald's has enough short-term assets to cover its short-term liabilities, indicating a healthy liquidity position, but it's not excessively high, which might indicate underutilized assets. Regarding the debt-to-equity ratio, this is negative because they spent more money on buying back stock than reducing debt, thereby reducing assets and equity. McDonald's bought back millions of shares in a stock buyback program in the year between September 2023 and September 2024, which reduced the total number of shares outstanding. This is an ideal situation for investors, as it means that the market value of the company's equity has gone up, but its debt also increased. When looking at McDonald's revenue, there was a slight increase of 1.6% in 2024 when compared to last year, showing a strong and solid company. Regarding profit operating margin, this was 45% in 2024, having decreased from 52% in 2023. This was due to a combination of factors including a decline in quick-service restaurant traffic, a negative impact from an E. coli outbreak, and the company's focus on value meals which compress gross margins. This was also reflected in a 2.8% decrease of the company net income and a 1.5% decrease in earnings per share in 2024. McDonald's free cash flow decreased 7.6% compared to 2023 due to a combination of factors: investments in McDonald's China and the acquisition of McDonald's business in Israel, changes in inventory and receivables, restructuring charges associated with modernizing its operations, and the sale of South Korea business, which resulted in net pre-tax gains, but also transaction costs and non-cash impairment charges. McDonald's experienced a negative return on equity in 2024 primarily due to a combination of factors, including a decline in sales, rising costs, and a negative impact from an E. coli outbreak linked to slivered onions, resulting in lower profits and a weaker financial performance. Regarding the dividend payout ratio, McDonald's keeps 37% of its profits to reinvest in the business, like expansion, tech, new menu items, etc., and pays out the remaining 63% to shareholders as dividends. This has increased when compared to 2023. Although a strong financial performance is a good indicator of a company's health, we also need to look at things that can't be measured directly with numbers, but are still very important for a company's growth and future. These factors include brand recognition. McDonald's is one of the most recognizable brands worldwide in the fast food industry. Consumers recognize McDonald's for its consistency and familiarity, which is a huge asset, and they always like to come back. News can also influence consumer behavior. For example, media coverage of healthy eating trends and fast food's impact on health has led McDonald's to adjust its offerings. The company has introduced plant-based menu items like the McPlant and expanded its salad and coffee offerings to cater to evolving tastes. In some countries there are bacon specials, omelets, and even soups. But in some instances it can also damage the reputation of a brand, like when it comes to politics, for example. McDonald's leadership plays a crucial role in driving the company's long-term strategy. Under the leadership of CEO Chris Kempczynski as of 2024, McDonald's has focused on innovation, technology, and sustainability while maintaining its core operational efficiency. For example, during the COVID-19 pandemic, it rapidly shifted to digital orders, drive-through, and delivery services. McDonald's is increasingly focusing on digital innovation, including app-based ordering, delivery services, through partnerships with Uber Eats and DoorDash, and self-order kiosks. These innovations help McDonald's keep pace with emergent future industries and the growing demand for convenience and enhance the customer experience. The fast food industry is witnessing shifts in its sector towards healthier eating, plant-based diets, and cleaner ingredients. McDonald's has been adjusting its menu and supply chain to align with these trends, such as offering lower-calorie options and reducing artificial additives. As a summary of the company's quantitative analysis, McDonald's presents itself as a strong and consistent company over time with different areas that is still trying to thrive. by bringing more value to its investors by paying continuous dividends throughout the years and adapting its core business with the challenges faced. By looking at the qualitative analysis, each of these factors reflects the evolving nature of McDonald's business and how it positions itself in a competitive, fast-changing global market. By focusing on innovation, maintaining strong brand equity, adapting to consumer demands, and adjusting leadership strategies, McDonald's continues to thrive despite challenges. By looking at McDonald's, we saw that the company had a 63% payout ratio and EPS of $11.39. The company has been consistently paying a dividend of $1.77, as of December 2024, per share quarterly and continuously growing. The company has a solid dividend yield of 2.24%, and the growth in dividends has been steady along the years. When looking at the stock performance in the yearly graph, the current price is up to around $300. However, the price has been steady around the last quarter. We could see a buy opportunity if we see a potential correction in the short run. When looking at the 5 years period, the stock had a continuous and strong growth from 2021, and it recently peaked at its highest value of $323 at the beginning of 2025. It presents itself at its highest values, so we could expect some corrections to look for buying opportunities in the short run. McDonald's had a solid 2024 year, although it encountered challenges. The company still presents itself as a strong and potential candidate for long-term investment, and it is adapting its core business to sector challenges and future technological developments. With continuous dividend payments and a solid dividend yield, the company still presents itself with great investment potential for the long run. Stock price is at its highest 5 years historical values, so if it becomes cheaper, it might present a buying opportunity at a pullback. Thank you for watching my channel. More analysis like this one to come in the future. Tell me in the comment box which other companies you would like to see here in the future.